Facebook parent company Meta is currently down close to 40% from its highs after losing more than a quarter of its value in a single day after reporting disappointing earnings. Really big crash, but does that now present us with the perfect opportunity to start buying this stock? Let's find out together. What's up, everyone? My name is Ale. Welcome back to my world of stocks. Whew, what a crazy past couple of days. But look, let's just keep it simple here. Let's take a look at what they reported and why that sent the stock crashing. And then we'll transition over to whether or not the stock is worth buying moving forward after the crash, looking at their future potential, looking at where they're headed in the future. We're going to talk about all of that. And if so, if the stock is worth buying, we'll also talk about what is the right strategy for buying into the stock. Let's just dive in. Okay, so pulling up the stock chart, you can see that it crashed by over 26% on Thursday. And if we zoom out to the past year, we can see that they are now trading near the very bottom of their 52-week range, which is a drop of almost 40% from the top. That's super significant for a company that performs so well, but we'll talk more about that a little later. What this basically is, though, I mean, if we take a look at a zoomed out like 10-year chart, you're basically wiping away all the value that they gained coming off of the 2020 recession and through the global health issue, where we've had lockdowns and so many people glued to their phones and their computers, and that really boosted their sales and it caused the stock to skyrocket. Because if you look before that, the stock would consistently trade below 200. Either way, though, it's still a giant crash, even if it is from, a surge. In fact, it's reported to be the largest one-day drop of their entire history. So let's take a look at why exactly that happened. Well, this was their earnings for the fourth quarter, and despite beating estimates on revenue with 33.67 billion versus 33.4 billion expected, they actually missed on earnings with EPS of $3.67 versus $3.84 expected. That alone, I think, is worthy of a small dip, but what really caused the crash seemed to come from their lower guidance, their increased expenses, and the reasons behind all of it. See, analysts were expecting guidance of over $30 billion for the next quarter, but Meta guided lower than that with a range of 27 to 29, so at the midpoint of that, it would be like a couple $1 billion lower than expected. But it didn't stop there. Meta went on to say that the entire year would be a struggle because of Apple's new privacy changes to iPhones as well as macroeconomic challenges. Just the Apple situation alone is going to result in a $10 billion hit for them this year, as it hurts their ability to properly target and measure advertisements on their platforms. On the macroeconomic side, they said that inflation and supply chain disruptions are resulting in companies spending less money on advertisements, which is exactly where Facebook makes the majority of their money. As it stands, Meta is in a sort of duopoly with Google in dominating the digital advertising market with more than half of the market share of the entire world. And as it stands, Meta is on track to control more than a quarter of it just by themselves. So advertising budgets dropping will definitely affect their revenues and their profits. And that's coming at a pretty bad time for Meta as they try to invest in the future of the Metaverse, which doesn't currently make them any money. In fact, it cost them a gigantic amount. Last year, Meta had already spent over $10 billion on it, and Bank of America estimates that it will cost as much as $50 billion before they're even able to break even, let alone start to actually generate any profits. And the thing about this reported quarter is that we got our first taste of that. This was the first quarter that they showed off their new Reality Labs segment, which includes the development of the Metaverse, and it only generated less than $1 billion in sales, but it costed over $3 billion as an operating loss. And for the full year, it was a loss of over $10 billion, which is up from over $4 billion in 2019 and over $6 billion in 2020. And that upward trend is looking like it will continue, as Meta CFO said during the earnings call that he expects the losses to increase meaningfully this year as well. All of that is now really scaring analysts and investors alike, because it's not even guaranteed that their transition over to the metaverse will be a success or if it will end up being a colossal failure. Now, personally, I'm more on the former side. I think it will be a success, but it's going to take many years. We're for sure many years away before a virtual world starts to dominate people's free time, at least in my opinion. But to be fair, we don't necessarily have to be that far out into the future for Meta to still be a successful company. And I'll talk more about that in just a second when we talk about their future and where we kind of go from here. But just kind of going through some of this right now, I just want to get that point across that it's going to definitely be many years until we see the metaverse start to actually bring in large profits for the company Meta. Right now, it's all about huge investments and unfortunately very large losses as they try to build up that huge infrastructure. And that's causing a lot of analysts and investors to be shocked. But what do they realistically expect? Meta is trying to gain a first mover's advantage. You think it wasn't scary and filled with giant losses when, for example, Amazon tried to be a first mover and transform the traditional kind of retail market over to online shopping? But look at what they've done thanks to that first mover's advantage and how beneficial it was for them. However, that first mover's advantage comes at a big price. You're going to have to pay a lot of money to be that first mover. And in my opinion, it's crazy to expect anything less. Having said that, we need to talk about whether those investments into the metaverse are even worth it to begin with, and if now is the time to buy the stock or if it's still too early to jump in. And for that, let's just take a look at the facts. Well, if you want to talk about whether the move into the metaverse is necessary, you have to keep in mind that Facebook itself, like the website and the app, it can only grow so much as a social media platform. In fact, this past quarter was the first time in their entire history that they saw a drop in daily users. And that's not entirely a huge surprise. Facebook has long been kind of stagnant in user growth for both North America and Europe, sometimes even in decline, but they made up for that with growth in other parts of the world. However, the rest of world part dropped this quarter and Asia basically stalled, which means that those foreign markets might be peaking and growth is needed elsewhere. Now, to be clear, when you include their higher growth platforms like Instagram, for example, you actually get a little growth every quarter and actually really good growth on average revenue per user as more and more advertising shifts over to digital and companies have to kind of bid against each other to get their ads on Meta's platforms, and that drives up the prices and it benefits Meta. But the point is that they can only grow these social media platforms so far before they start to stagnate and have to compete more heavily with other things that grab people's attentions. As it stands, Meta's platforms have almost 3.6 billion monthly active users. That is insanely high and very difficult to keep growing. And on the competition side of things, Mark Zuckerberg said during the earnings call that competition from rivals like TikTok is intensifying, and that's part of the reason why they're trying to invest more heavily in their short form video feature called Reels. But the problem is that those new products are not monetized as heavily as older ones. So that's also part of the reason why profits are currently taking a hit. And we say profits are taking a hit, but really, if you look at it, 2021 saw the highest operating profit in their entire history, and it wasn't even close. You're talking almost $24 billion in 2019, which grew to $33 billion in 2020, which now grew to a monstrous $47 billion last year. Remember when we said that Bank of America estimates it'll cost them $50 billion before they start turning a profit on the metaverse? Well, Meta can literally pay for almost all of that in just a year. I mean, that's freaking crazy. And yeah, you see the Reality Labs segment there taking a hit of more than $10 billion, but their other apps more than made up for that as they grew from $39 billion in 2020 to almost $57 billion last year. That is so crazy. That's almost $20 billion more that their various apps made in just a single year. How unbelievable is that? And don't get me started on revenue. That skyrocketed despite already being massively large, from about $71 billion in 2019 to $86 billion in 2020 and then $118 billion last year. That's growth of around 37%. That is huge growth for their size. And sure, that growth is falling fast. This year, it's going to absolutely plummet. I mean, let's be honest about it. It's going to plummet down to about 15% and then slightly uptick to 17% after. But I feel like Facebook is always treated unfairly in that sense. how are you supposed to be this massively large with a couple of gigantic years in 2020 and 2021, thanks to the global health issue where everyone was, again, staying home, glued to their phones, glued to their computers? And then people still think that Meta should be able to keep growing at those enormous rates? That's crazy. And by the way, double digit rates is still super good for their size. I see much smaller stocks that people buy all the time that don't even grow at this rate. So when you look at the whole picture, it's actually not that bad. And especially when you compare it to their valuation after the stock crashed by so much. I mean, you're talking about a forward P ratio now of just 16. That is so incredibly low for a company like this. And even more so is their PG ratio that is only 0.7. It's hard to even express how low that is. So I'm just going to show you guys some comparisons. On the P ratio, you're talking about social media competitors like Snapchat and Twitter trading for 54 and 27. Their biggest competitor in Google trading for 26. Even other similarly large companies like Amazon, Microsoft, Netflix, Apple, most of those are trading in the 30s or even 40s. But Meta, they're all the way down at just 16. I mean, it's not even close. And if you think that's crazy, look at the PG ratio. Their Snapchat and Twitter don't even have one because of how much they're expected to struggle with profits. And then every other company is over 1, 2, or even 3, while Meta is just 0.7. Google looks pretty good, by the way. This video is actually making me realize that I should probably start buying some Google stock, but that's besides the point. Overall, Meta's valuation is looking super attractive. The question, however, is whether that valuation is worth it for what you'll get in return throughout the future. Well, I mean, things do look actually pretty good if you're patient. I mean, according to Statista, digital advertising is set to grow to nearly $700 billion by 2026. It's a gigantic market, and yet some analysts estimate that the metaverse could be a global market that is worth even more. In fact, Bloomberg Research estimates that a metaverse comprised of gaming, social networks, e-commerce, business, entertainment, and more will be worth nearly $800 billion. And get this, they think it's going to be worth that by 2024. Now, personally, I think that's way too soon, but I could definitely see that happening over the longer term. I would see that maybe, like 5 to 10 years out in that kind of distant future. That's where I would see those kind of numbers maybe being possible. Right now, I think it's way too early. But regardless, the problem for Meta is that they're trying to speed up that process, and that's going to cost them a ton of money, which will result in analysts and investors getting scared out of the stock, like, of course, we just saw. But I mean, you look at how much the stock has crashed already, you look at that valuation, you look at how much money they make despite the heavy metaverse costs, and you add on to that one of the absolute best balance sheets in the market with more than 3 times the current assets to current liabilities and more than 4 times the total assets to total liabilities. And at some point, this stock just becomes too attractive to ignore. I mean, even if you look at how bearish analysts are on the earnings day, there was literally 7 downgrades just that like 1 or 2 days alone. And by the way, every single other one was just a maintain, like none of them were upgrades. But you're talking 7 downgrades in just 1 day. And yet, despite all those downgrades, the average rating is still a buy. And when looking at the price targets from those same analysts, the stock is currently trading right next to the absolute lowest price target, and it's more than $100 cheaper than the average price target, and it's more than $200 cheaper than the highest price target. So I really feel like this is actually a pretty simple situation to break down in terms of where we are and how the stock should be treated going forward. Let me just quickly stress though, this is all just my opinion. Do your own research, make your own decisions. Don't ever copy me. I get things wrong all the time. In fact, I was buying Meta stock going into this crash. So I get things wrong all the time. Don't ever just copy me. Make your own decisions. But if you want my overall opinion on all of this right now, well, here it is. I think that we've got a tremendously successful company here in Meta that is going all in on the future of the metaverse. And I think they're going to pay a premium price to get that first mover's advantage. And at this point, I can't think of any other company that is investing more into the metaverse. I mean, Meta is just going all in. They're investing huge amounts of money, and they're even restructuring themselves to prepare for that future. And the thing is that they're in a great position to really dominate that market because they already have more social media users than really any other company that I can think of. And you know that they're going to try to lure as many of those people into their metaverse where they will advertise to them, they will sell video games to them, they'll sell e-commerce to them, like online shopping, but they'll also sell digital products to them like clothing for avatars, maybe digital houses, boats, planes. Possibilities are endless. They could sell entertainment to them, they could use it for business, all kinds of different experiences. And you know that the metaverse is just going to evolve over time, and they're going to find new revenue streams that we might not even be thinking of at the moment. But those are the key words there: over time. This is going to take a very long time. And if there's one thing that we know about Wall Street is that they are very impatient. They're not going to want to wait for these things to take shape into the future of the metaverse and all this stuff. So I think in the meantime, what we're going to see going forward is a very volatile stock. There's going to be moments where Meta as a company is going to maybe stagnate in certain parts of their business. You're going to have very large expenses that are going to scare investors and analysts into selling out of the stock, and that'll cause it to go down. But then there's also going to be moments where you'll see some of the potential, maybe new updates will come out and people will get really excited, and then you might have some FOMO and people jumping back into the stock. I just think it's going to be pretty volatile and be moving up and down. And I think the biggest criticism going forward is going to be that they're just throwing too much money into this project. But my whole kind of counter argument is, what would you rather Meta do? They have an insane balance sheet with so much money. They make so much money every single quarter on the bottom line. They bring in such huge profits. What do you want them to do? They're already at the top of their market. At this point, when you're already dominating a market like Meta is with social media, you've basically got two options. You can let your business stagnate and you can let competitors come in and kind of kill you off and take you off the top, or you can innovate and invest into attacking a new market and try to become dominant in that market as well. And to do that, you're going to have to spend a ton of money, especially going into a brand new market where you're trying to get a first mover's advantage. And I have no problem with Meta spending the money on that. Spend that money. I mean, you've got it there, use it. You have to be innovative. That's how a company remains successful, remains relevant, and keeps the growth coming, because otherwise they'll just stagnate or they'll go into decline. So I don't really have a problem with what they're doing. Personally, this is the type of stock that I actually kind of like chipping away at over the long term. It's a company where I see a long-term kind of vision. I'm going to keep it a relatively small position. Right now, it's only about 1% of my portfolio, so I can't lie to you guys and pretend like I have this huge investment in Meta. It's actually not that big, but I plan to turn that into maybe like 3 to 5% of my portfolio. So that way, I've got plenty of room to double down, triple down, quadruple down. And if this remains a volatile stock, I'll be chipping away at it on any big dips and crashes. And we just had one, so I went ahead and chipped away. I actually bought some of this stock right on the day that it crashed. I bought for around $239 a share. So going into the future, again, this is a very long-term stock for me. I'm thinking out I'm thinking like 10 years out. I'm thinking much more than that, actually. I'm pretty much thinking decades out with the future of the metaverse and stuff like that. And of course, things can go wrong, but that's why I'm keeping it a somewhat, relatively small position. It's going to be probably 5% of my portfolio when it's all said and done. So if things go under, it's not that big of a deal. But if things take off, I've got a decent investment there. So let me know what you guys think down below. I'd love to hear your thoughts. If you have any comments, I'd love to read those and I'll try to respond to them. But thank you for watching the video. I really appreciate all of your support. I hope you enjoyed it. Hit the like button if you did. I will catch you in the next one. Take care. Bye-bye.